Thank you, Professor Tilley, and thank you, Professor Krishna, for your great presentation. And congratulations on launching this fabulous and important initiative, and also to IIT Madras for ensuring that this initiative gets launched. Greetings, everyone, from Sydney, Australia, and the University of Sydney Business School. And I think very quickly, the whole point about how do we enable startups to grow and flourish is such a critical issue, as Professor Tilley mentioned, not just for countries like India, but throughout the Western world, because you are certainly seeing, and we're seeing this throughout, this transition between large established industrial companies to large established STEM companies, science, technology, engineering, maths-based, and it is the startups that are really enabling these STEM IT companies to continue to thrive. I think, as Professor Krishna mentioned, really providing a source of innovation and that next wave of products and services. So we've got a number of questions that have been raised in the Q&A. So one of the questions I might throw to you, Professor Tilley, and that is about the database that you flagged. So I think it is really critical for centers to really bring research and data to evidence-based policy questions, practice questions. So Professor Tilley from Swechha, how is the data collected? And do you actually use secondary data to collect information related to VCs and startups? Do you engage in primary data collection? Could you talk us a little bit more about the database you shared?
Okay, thank you, Suresh. So essentially, the database is aggregating data, and not only aggregating data, and in the process, it is curating data. So when we start collecting data, today most of the information available is very patchy in nature, and it is also what I would call has mono dimensions, in that many of them just focus on just one aspect of it. Either it could be finance related, or either it could be related to the incorporation, or either it could be funding related. Right? So what we have really putting together as a part of this data set is to really look at capturing a very holistic information on the ecosystem as a whole. So we have our focus on some of the key main players, right? One is the startups, and then we have angel investors, and then we have VC funds, and then we have incubators, and then we have intellectual property, and then we have mentors. Right, so essentially, it's basically trying to put together a data set that cuts across some of the key players in the startup ecosystem. So now the question about how do we collect the data? So as I was just first mentioning, we are a data aggregation platform. So that means we have to really put hooks to some of the existing secondary databases that are already available. And then we also trying to get access to newswires that provide a lot of information about the recent investments, the recent startups that have been created, and so on and so forth. Right? Second is being a part of IIT Madras. It gives us access to some of the institutional channels, that are there, which will help us to further enhance the data that is being obtained through some of the secondary data sources. And third, we also have a partnership with one of the existing large, platform who have been tracking the investment made in the startup ecosystem in India. So that becomes yet another data source. Going forward, we also hope to collect a lot more primary data right from the users of the platform. So that means today we'll be looking at founders, we're looking at investors contributing to their data resources for the platform. So that's how the data is collected and data is populated. So Winos plays a very important role in terms of ensuring that the data is credible. And because ultimately, whatever data is, the credibility is very important, the reliability of the database is very important. So Winos, to its part, ensures that. Second, database also should be updated. Otherwise, given the fact that startup is a very, very, fast-moving, dynamic sector, we have to constantly keep updated. So we ensure that there are constantly updated. And thirdly, we ensure that newer data that might arise. For example, very soon we'll be also adding business and technology related data pertaining to startups as a part of the repository. Right? So newer data will keep on added so that the product becomes, more and more, the features of the product gets more and more expanded with time. So that's what I have to say about the database search.
Fantastic. Thank you, Professor Delay. Professor Krishna, a question for you given your finance expertise, and perhaps it's a question from someone, Bhavika from a startup perspective and Sunil from an investor perspective. So Bhavika's question is, how can we estimate the potential value of our startup? And Sunil's question on the other side is, most of the startups do cash burn, very uncertain when they make money. How do you assess it when someone comes with an idea? So what advice would you give to both Bhavika and Sunil, Professor Krishna?
Yeah. How do we estimate the possible potential of our startup? What is the answer? You look at the industry in which the startup firm is coming. There are a number of parameters that any investor will consider. Look at the industry and industry growth rate, and look at the potential promoter and what is his expertise, experience, and whether he has already been in the business and was he successful in the earlier ventures. So as of now, angel investors are looking at estimating the future cash flows based on his experience and based on the industry growth rates. That's the way of quickly answering what are the possible potential of any startup. Basically, his promoter's experience and his expertise and the possible industry growth rates and the probability of the success of that innovation. The need for that product or service in the market is assessed. And yes, this cash burn issue is a continuous phenomena. So the promoters are expected to be very careful about making a future cash flow expectations. Cash inflows doesn't come for any new venture in the first few years. So he should be very careful in estimating his requirements and make his investments ready so that he will not really get burned out. Yes, because of pandemic issues like this, many startups are going through the kind of burnouts which are not anticipated or expected, but this is, I assume and believe that it is one kind of a situation. This doesn't recur and hopefully should not recur in any business cycle, right?
Fantastic. Thank you for that. Professor Tilley, maybe a couple of questions. There's a couple of questions that talk about the success rate of startups in India. And then what about in those regions where maybe they are more reliant on tourism than some of the other industries that you mentioned in terms of startup growth rates, such as, for example, the Andaman Islands, which is mainly reliant on tourism. So two questions. What's the success rate for startups, and what about those regions that are more reliant on tourism?
Right. If we look at the success rate of startups, what do we really mean by, success rate is it to really look at their ability to get the first round of funding or their ability to survive, for a certain period of time. So there are multiple ways to really look at what is the success rate. I am going to take one aspect. If the aspect is to say, let's say, for example, to be able to attract some external investment. So from that perspective, today, I think about 8% of the total startups that are formed are able to successfully raise some external investments from private investors. That is, it could be angel investors or it could be VC funds and so on. And there are several who are able to successfully get supported from government. So the government actually has several schemes that are providing some kind of grants through the incubators and so on. So that is significantly, higher. This number is probably not as high as what would probably see in the West, right? So if you look at the US, there by and large, about 1/3 of the startups, close to 33% of the startups that are formed are able to secure some kind of first round of external investment. Right? So we still have a long distance to cover as far as the ability of the startups to raise first round of capital is concerned. Right? Second, if you look at the survival, most of the companies that get registered today, in Indian context, they may not really go for that kind of, external funding, many of them might tend to get operated in the traditional SME mode, as we may call it. Right? Looking at the traditional source of capital, cash flow based lending or collateral based lending. So that I think was going to be one of the major sources. So from that perspective, if you look at it, I would put the percentage rates to be, a lot higher, maybe about 20 to 25% of the startups are able to kind of get collateral based lending and survive a reasonable amount of time. Second is pertaining to startups in certain sectors like tourism, right, or in particular regions such as Andamans. So today, what the government is looking at is specifically using startups as a way to achieve several public policy objectives, right? It could be in terms of development in rural areas, or it could be in terms of making available certain facilities that are not possible, where government is not in a position to do the last mile delivery, but then private entrepreneurship can actually be very effective in doing those delivery and services, right? So I think entrepreneurship is getting a much larger, in the scheme of things. So if you look at tourism, if tourism is seen as an engine for development, particularly in states, let's say, for example, if you look at Kerala, another state that is very predominantly development of tourism, where entrepreneurship is encouraged, right? Entrepreneurship encouraged both at the level of the state government and as well as at the level of government. But what it's expected in many of these tourism related startups is to see how they can be a little bit more innovative, how they can be very different from some of the existing projects that are already being supported. So this is what I would like to say. In Andaman and Nicobar, basically speaking, entrepreneurship is still very, very nascent, right? That is naturally because of the fact that a majority of the development is still driven by the public sector and the government. Andaman's being a very strategically located area, and also in terms of a lot more development needs to happen. So government is still playing a majority role. In fact, as per the data repository that we have created, there is only one incubator in Andaman and Nicobar, right? So it still needs a lot more to do. But at this stage, I think the government is making vigorous initiatives how can really create an environment for private sector entrepreneurship in Andamans.
Thank you. Thank you, Professor Tilley. And Professor Krishna, there's a few questions about venture capital houses. How can one make connections with venture capital houses? And as part of that, how can we address the issue of liquidity of VC investments? So could you please comment on those issues?
Yeah, sure. What do you mean by the word illiquidity of investment? Somebody is asking.
Yeah.
Actually, when you invest, most of the startup firms, they don't go for public. So their equity issue is not traded in the market. So when you have to exit, there should be another investor. Am I audible?
Yes, you are audible.
There should be another investor who is willing to buy your stake. Otherwise, you cannot exit. So that is what we mean by the word illiquidity of investment. So when you invest into a startup, you need to really take a call whether this startup converts into a successful entity. Only then you can make a return on it and you can come out happily. If it encounters any difficulties and if it turns into a failure one, there is a probability that you lose all your investment. And most of the times, you will not be able to decide whether the startup can be turned back into a success track. So that might take huge longer time. Many of you must have heard about Coffee Day story. As the consumers, we look at Coffee Day, Cafe Coffee Day, as a very successful startup in India. But you listen the stories from a venture capitalist who funded the startup. They tell you a different picture, how long they had to wait, what were the difficulties they faced, and what is the internal capital condition. So the perception of a consumer is very different from the perception of a venture capitalist. This is what I mean by the word. It's very difficult investment choice, and the venture capitalists will make a detailed analysis before they take a call on whether to invest in a startup or not. The other question is, how do we get connected with venture capital industry is, through a proper pitch book that you prepare about your startup. You do an internal analysis and provide a detailed expected path for your venture at different stages. At least for the next 2-3 stages, you should have a clarity how much more investment may be required and how do you want to go about it. So a detailed analysis if you make and you give a good presentation to a venture capitalist, fix your appointments, give me your introduction, your presentation should be impressive and information should be supportive with analysis, then you will be able to get into the impression part of venture capital who will be willing to experiment with you or join you on your venture.
Thank you. Professor Tilla, there's a lot of questions here about how to convert innovations into startups or make innovations then startups, which really speaks to the idea or the difference between an innovative idea or technology and then the challenge of building an actual business around that innovation and technology and actually thinking about the business model. So would you like to comment on that difference and how people should think about the business model in addition to the innovation?
Right. Okay, so thanks, Suresh. So this is a very interesting question, and this is the hub of the current startup environment that is there in India today, where people want innovation to be the bedrock of startup activity. So innovation is a very broad word. So normally what happens is innovation can be in multiple forms. Innovation can be in the business, innovation can be in product, innovation can be in service, innovation could be in technology, different areas. But by and large, how do we really make this innovation more marketable? So one of the primary routes is to see if we could really create a patent, that can actually protect this innovation in some sense, right? Because patent, gives a lot of protection, and patents also sends out a signal, so that this is something that can be commercializable, and this would be of interest, for example, for potential users, right? And so ideally, the question of converting an innovation to startup is essentially the question about how do I make it from lab to market, right? How do I make it from idea to lab and then subsequently from the lab to market? So idea is something that what you have in mind, and for it to convert to innovation, it has to get to the lab stage. And from the lab to the market stage, if you have to really looking at it, patenting is one perspective. But then not all of the innovations are patentable, right? Maybe science and technology related innovations are patentable, but then there may be a business innovation, that could be a process innovation, which may not be easily patentable. So what people normally talk about is, you have an idea, the next step is to really see if we can do what is called as a POC, right? A proof of concept, right? Once you develop the, proof of concept, and people talk about the next stage, can we really look at developing a MVP, right? A minimum viable product, right? So once we develop the minimal viable product, and then once we are able to sign up a few customers, then we are able to determine what is called as a product market fit. So many times what happens is entrepreneurs are so passionate, and they might not really be able to look at blinkers, right? They may all be wearing blinkers, and they will all think that this product is probably one of the greatest products that could ever be there, and there'll be easily customers who will be signing up for this. But then many times the customers may not find it the product as useful, or they may not be as excited, right? So it's important to establish what is called as a product market fit. But once we actually develop the product market fit, then substantial investments can actually be kind of channelized, and it can really take off. But how do you really go through the process? So today, there is plenty of institutional support that is available in the Indian context. At the university level, so most of the entrepreneurs from science and technology, they may not be very familiar with business related issues, right? So to precisely help people from non-business backgrounds, we have incubators. And we also have even more specialized what is called as a pre-incubator, right? The pre-incubator looks at the prima facie the feasibility of turning an idea to a business, and subsequently an incubator helps to nurture this very early stage business to reach a certain stage from where they'll be able to stand on their own, right? So that, I think, would be the right way to go about commercializing innovation to start. All this with the primary understanding that the traditional method of innovation commercialization is to license it out, right? License it out to a larger industry bodies, or license to industry SMEs and so on, that can then use this innovation and then possibly pay royalties or even buy the innovation. But today the new paradigm is why should an inventor look at only licensing? Why can't the inventor look at commercializing it himself? And that means taking the route of the startup, right? Using a startup. And then if he's not very familiar with how do you really create a startup, then there is incubation support. The incubator will help the inventor to be able to go through the kind of various process through which the idea can successfully translate it to a very viable product that can be used by consumers. So that's what I would like to add here, Professor Suresh.
Great. And I think this also answers some questions in the chat from Q&A from Gaurav about startups depending on both city demands as well as market demand, as well as the innovative idea. Professor Tillai, just as you were talking, you mentioned patents. There was a question about patents, and the question is this: how can we make sure that patents filed by startups do not end up as non-practicing entities, patent trolls in the industry? So how would you like to respond to that?
Ultimately, I think patenting involves a lot of, there's significant expense involved in the entire process. So only patents that probably are worthwhile, to provide a return on this investment, can be patented, right? Particularly for startups, right? Having a lot of patents might be good to showcase their scientific prowess, but then ultimately, how would this get translated in terms of cash flows? I think so. That is very important. Most of the time, large companies might end up filing a lot of patents because for them, their objective is to see how they can defend patent encroachment, right, from potential competitors. But for a startup, which is probably short in terms of resources and capital, to be able to spend the same amount of money that large companies are able to spend would not be feasible. So therefore, startups, I think, need to be very practical in terms of looking at only making patents where it is absolutely needed, and where it can in some form give them value, right? Value can be in one source. One is, investors can perceive patents to have a lot of value. So if investors perceive patents to have value, then, it is good for the startups to go ahead and patent it so that they can be able to, realize some of its value. Second is patents, if they are able to give what is called as create a moat around the startup, giving them access to strong revenue streams, then it is worthwhile to go ahead and have a patent. Right? So in the case of a startup, the primary goal of the patent is to really see how it can probably create value, and in a certain form also how it can help them to give more security to their revenue streams. I think this should be the main objective.
Right, thank you. And Professor Krishna, there's some questions here which is more, I guess, seeking your guidance. So when a startup founders see an industry already with some incumbent organizations, like, say, for example, online food, you have Zomato and Swiggy, should they be looking at that industry or seeing some competition, look for others to start up? And as part of that, could you maybe comment, please, Professor Krishna, on some of the major causes of startup failure as well?
Yeah. How did Zomato enter? Which is the first one to come into the industry? Is it Swiggy or Zomato? I don't know. So when you see when one company is doing pretty well, the other one is entering and making it success, meaning to say there is so much of potential demand and it's a new vertical of service. And you need to estimate the growth rate of the industry. How do we estimate these growth rates? How many people will be looking for demanding this kind of online food delivery? Based on, the number of working population, the number of educated people, the number of busy people in the industry, who will not be able to really go to restaurants for having their food. So based on all these economic input indicators, we estimate the industry growth rate. There's always scope for other people to come. There's always scope for other people to come. But you need to make your, you need to play your cards carefully. You cannot just like that think that you will go to Swiggy level. Differentiate your service and begin in a small way. You can always hit the success. Right?
And any other advice about the causes of failure in business and in particular startups?
Pardon?
Major causes of failure for startups generally?
Major causes.
Causes, reasons for failure.
Reasons for failure is sometimes the industry will not go the way you expect it to react. Sometimes your product wouldn't have gone for test marketing, or your service would not have been properly. You wouldn't have tested the market whether they like your product or whether they require some modifications. There may be issues in product development. There may be issues in financing. I mean, first 10 years for any startup company, both from marketing as well as finance side, is very challenging. Both will go hand in hand. If you have finance, it doesn't mean that the venture will be successful one. Similarly, if you don't have finance, you will definitely not be able to handle till you turn the firm into a successful one. So it's both marketing and finance should go hand in hand to make it successful, together with whatever technology you have.
Fantastic. And would either of you maybe comment on how you see the Indian startup ecosystem and the role of AI, artificial intelligence? Do you see it sort of prevalent? Where do you see the opportunities? AI, technology, data science, digital marketing, I guess a couple of questions.
Okay, let me go on this, Professor Krishna.
Yeah.
So today, I think the current paradigm is there's a lot of value that can be harvested using data analytics, artificial intelligence, machine learning, and related areas. All right. So that's a current big belief. So we see that there is a lot of scope. So therefore, I believe that for the next few years, these startups in this areas can really look at innovating new business models, addressing new problems, and in the process also create a lot of value. So digital marketing is today a very important way for go-to-market. So I think from that perspective, most of the companies today are not relying on the traditional channels and advertising and marketing routes to reach the customer. Go-to-market is emerging to be a very, very important route. That's also because digital marketing channels provide a lot more analytics. It helps to target the user a lot more precisely as compared to the traditional channels. So I've interacted with several startup entrepreneurs, and many of the startup entrepreneurs prefer digital marketing because it can really scale up very fast, right? One can today reach the users across the globe using digital marketing channels, and in a very, very precise form. Let's say, for example, if somebody would like to target audience in the age group of 18 to 25, so it's possible to be able to reach that kind of an audience using digital marketing techniques.
Okay, great. Now we still have quite a few questions, but I know that time is out for us. So it's such a great presentation, Professor Thillai and Professor Krishna, and it is such an important center that you are launching and have had your inaugural first session webinar. So Professor Thillai, I might hand back to you quickly just to re-emphasize and remind participants how they can engage with the center.